Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. In these videos, I do a little bit of everything. We're going to be talking indices, commodities, currencies, and much more. I do want to just ask as we get started in this video, if you could hit that thumbs up button for me, I greatly appreciate it. It really does help just to support the work on my YouTube channel. And we're going to start with indices. Just so you know, we're going to pretty much stay in order here, just so you can skip ahead in the video if you would prefer. We're going to start out with some of the indices here first, which ended out the week pretty strong, actually, but not quite able to take out those all-time highs. So if we take a look at the S&P 500, first and foremost, from a price action standpoint, we have to take a bird's eye view and say, what have we really done here? If we go back from where we currently trade, we've been trading around this area, this previous all-time high since early December until today. This has actually been a remarkable uptrend for several years now. We're going into, our third year of a bull market here. And overall, things look very, very strong for the S&P 500. That being said, recently with the change of administration and a Fed that is undecisive or unable to fully commit one way or the other with whether or not they're going to cut interest rates or hold them from here, there's an interesting story for stocks. And I think one of the big things that has been confusing for people is that if you take a look at like Trump's tariffs and if you take a look at inflation, those two things on their own would tell you there's probably a good reason to sell or short the stock market because things look a little rocky from that perspective. The missing part that most index traders who are confused about this might be missing are earnings have actually been very good overall for the S&P 500. We're seeing big companies putting up great earnings, and that is holding the valuation of these companies. Remember, when we talk about the S&P 500, we're talking about 500 large U.S. companies, and if their earnings are looking really good, it offers a bit of a cushion here to the index price, holding up very well. Now, this is not evenly distributed in terms of sectors. There are certain parts of the market that are doing better than others. In fact, some of the names that led last year, for example, Amazon and Apple and Google, the big Mag 7, right? Most of them have actually not performed as well as the rest of the market, barring a few names, for example, like Meta, where you've had this massive, gargantuan move to the upside here. Congrats, by the way, to anybody who is a Meta shareholder. You have companies that are working really well under the surface, but as a whole, there is a bit of a range-bound nature to this market. And from a price action standpoint, we closed the week with some confidence up here around 61.20 on SPX. I mean, that's a pretty good close considering everything we've been going through with the stock market in recent weeks. We've had, Fed meetings where, it looks like the Fed's going to pause interest rate cuts and then deep-seek sell-offs and then tariff concerns. We've had no shortage of reasons to get nervous in the market. In fact, I want to show you something while I make that reference because for the index traders, you might find this interesting. You guys know if you watch my videos, I'm big on investor sentiment or trader sentiment as a way to kind of gauge the risk to reward in the market. Not necessarily short-term direction, but how tilted one way or the other is the market. And when everybody gets on one side, there can be some interesting opportunities. That being said, you will not catch me short the stock market or short stocks or indices at this time because there's an interesting contrarian indicator that's been flashing here in the form of the AAII Investor Sentiment Survey. This survey asks traders how they're feeling about the stock market going forward, and we've reached a multi-month high for bearishness for retail trade. Well, for traders in general. I'm sure there's institutional traders, retail traders. The point is, sentiment here across the polled survey respondents is bearish. There's actually a pretty strong kind of crowd mentality here to actually be cautious on the stock market. So I suppose I'm definitely not alone in thinking that. So this it keeps me from actually taking any short positions. That being said, I'm not necessarily bullish either. I just remain neutral on indices. And what I'd like to see, what I'm looking as a onlooker to the indices right now, is I'd like to see a decisive close above. In fact, I should probably adjust my S&P 500, or at least the very minimum, add a secondary level here to my chart here, just denoting that, okay, we are at the all-time highs. There's mixed sentiment here. There's also good reason, I think, to be cautious on this market. And I'd need to see price action really impress here. What I mean by that is break up into, possibly even into, what is that, 6,200? Not quite 6,200, somewhere in that area. If you could get a move up above this area of resistance, pullbacks from that, I would imagine in a strong bull market like we are in, there's a likely buyer to buy that pullback. But as we sit, I am kind of just uninterested, and I do have other areas of the market that I like more. A similar story could be told with the NASDAQ. Again, when we take a look at the overall EdgeFinder's top setups page, which of course takes into account economic data, technical readings, and sentiment data, I'm not getting anything here on the indices. You've got NASDAQ as a bullish rating, S&P 500's down here. I'm sorry, NASDAQ as a neutral reading, S&P 500 also as a neutral reading. The DAX and the UK 100, interestingly, foreign stock markets are getting better readings right now than the S&P 500, NASDAQ, etc. So you've got the Japanese, the German, and the UK's stock market getting strong readings on the EdgeFinder. Meanwhile, US indices are not getting those same readings. And we can dive into that a little bit closer. Maybe it's a good time just to stop by the U.S. economic heat map and take a look here. And you can kind of see where I'm going with this before I even get started. There's a lot of red on the screen. And what does that tell us? Well, if you're an EdgeFinder user, you know exactly what this means. Red means less ideal for risk-on environments. Basically, services PMIs, missing expectations. GDP numbers, missing expectations. Retail sales this past week missed expectations. So you have all these numbers that are coming in light, they're coming in weak, and that makes the consumer look a little bit less promising. It makes business optimism maybe slightly less promising than previously thought. The point is, the environment here for me is just not as attractive for stocks at this time. Now, I continuously make this point. I'm not here shorting the stock market because there are still strong earnings and the overall thing is in a bull market. I just think that there are other areas that I like more at this time. So let's go ahead and move on to some of those areas, which we can dive into gold and silver. If you've been watching my channel, you know I've been probably a little obnoxiously persistent about this thought, but I do like gold and silver quite a bit more. They're getting strong confirmations here on the EdgeFinder. In fact, gold even poking into a very bullish setup here. And I want to discuss this. Why is this? Well, without going down a deep rabbit hole with the economic data, we may be tapping slightly more into a stagflation type environment. Now, we're not in stagflation, and I've been clarifying this over and over in my videos. I'm just saying that with some data missing expectations, there's a possibility that we're in the early stages of turning into more of a stagflation type environment from this Goldilocks environment that we're in. What am I talking about? I'm talking about inflation going from cooling off to heating up, and some of our growth metrics going from hot to cooling off as well. That stagflation environment favors alternative markets like metals, where people get out of the way of stocks or they get out of the way of cryptocurrencies, which are high risk, high reward assets, and maybe they go a little bit more defensive into possibly some sector rotation in the stock market, maybe some of the more defensive stock sectors, or things like gold, where people feel that they get a little bit more value for their money and they feel like they're playing defense against a potential higher inflation environment. Gold in that scenario is something I'm very interested in. On Friday, we had a bit of a pullback. So now we're taking a look at gold's price action perspective. What we can see here is we did get a pullback. And my goodness, the comment section on my videos and in my, in my circles inside of our Discord and stuff like that, a lot of people started, whipping out the bear playbook. Oh my gosh, this thing is reversing. And here's the thing. Maybe it is. I don't know the future, and nobody really does. You can watch 1,700 YouTube videos tonight, and you'll still not know for sure what the market's going to do. Nobody knows with certainty what the market's going to do. But here's my thought process on this. A simple momentum scan of gold shows us that we are in a really strong upward momentum push for gold. Can I show you a similar chart that's in the stock market world that I briefly mentioned earlier? Let's take a look at Meta once more with this momentum filter. What you'll see here is that there is no such thing as calling a top on this recent move in Meta. If you've been trying to short Meta, or for example, another very popular company, Palantir, these companies are moving with so much momentum, and to think, oh, this is easily the top, or trying to call the tops on these kinds of momentum runaway trains lines is a really dangerous game to try and play. When I take a look at gold, I don't see oh, this is overbought and it's got to crash from here perspective. I see the fundamentals continue to support an environment where people are a little bit nervous about tariffs and inflation, and central banks are buying gold to get off the dollar standard. National debt in the United States is going crazy, and the physical supply of gold is limited. You can look into that more on your own time if you'd like, and I'm not going to dive into why I'm a, perma gold bull, but if you watch the channel long enough, you'll know I'm pretty much always bullish on gold. I just take breaks from buying it and selling it based on what my system's telling me, but I'm always looking for an opportunity. And right now, as crazy as it may sound, as a momentum trader myself and focusing on the fundamentals, I had no interest in trading gold over here, but I have a lot of interest trading it after it's broken to new highs. Does that sound counterintuitive? Well, most things in trading that you've learned are probably wrong. That's the reality of the markets, is most people learn things that they probably shouldn't be doing. The reality is sometimes it actually makes a whole lot of sense to buy high and sell higher. If you're a momentum trader like me, I focus on the fundamental analysis going on in the markets, the macro story that we're seeing forming in markets, and I trade momentum. So when I see a chart like this, I don't see, oh yeah, this has got to reverse. I see an opportunity to ride a trend as long as I'm constructive with my entry points, I'm diligent with my risk management, and I stick to the fundamentals. I like the setup. With gold giving me a confirming bullish signal on the Edge Finder right now, I definitely like, personally in my own system, the opportunity of buying a dip on gold, and I'll be looking to do so this week. Momentum still favors the bulls, and by the way, if you'd like this momentum indicator, the A1 momentum indicator can be found on our website, a1trading.com. You can find all of our indicators, tools, and softwares on our website. So when I look at gold here pulling back, I actually really like the opportunity here to potentially even get long on the 4-hour chart, or if we get a larger pullback, a move down here actually looks great for a possible entry. Yes, that would mean short term we lose the momentum, but I actually really like even the weekly chart on gold. The momentum that's forming here looks really good, and I am absolutely a bull in 2025 on gold. In fact, my target at the beginning of the year was 3,000, and I've been mentioning recently I think I might need to revise that because things look so strong here for gold. Fundamentally, it's really shifted. We've seen a lot of data coming in, cooling off for the US, and that scenario makes me look at the dollar with a little bit of a cautionary tale here. Look at the dollar index, guys. We've got a break to the downside, and things look really interesting here. Dollar bearishness kind of taking place all of a sudden, with our heat map going from blue to red, as we discussed a moment ago. By the way, guys, if you'd like to try out the Edge Finder, we have trials available in the description down below. You can get 30 days access to the tool for $199. Yes, there's a fee to our trials. The reason we do that, and I've mentioned this in most videos, is we've had people in the past when we did a free trial offer where people would just change their emails and ask for a new trial, and we would, basically get a bunch of people who were wasting our team's time. I mean, we dedicate personal one-on-one time with everybody who's doing trials to make sure you fully understand how the product works. So if you're serious and would be open to the idea of putting down a small amount of money to try out the Edge Finder, that is totally an option that we offer. You can find out more information in the description down below, or if you'd like to, you can use the subscriber discount that's in the description and just go ahead and lock in the software for yourself. YTVIP is the promo code you'll want to use. There's a link in the description down below, and if you have any questions, please feel free to speak with us on our website for more information. So the dollar index here trending lower. I mean, we have officially changed gears here, guys. What we've seen is this weekly upward trend cracking to the downside. I mean, this has been a very relatively easy environment to be bullish on the dollar. That, I think, changed on Friday. We've really shifted. We had several things flip bearish here for the dollar index. Without going to the heat map again, off the top of my head, JOLTS job openings, retail sales, services PMIs, number of others. The economic data has tilted from being just a permanently bullish story for dollar to mixed, and mixed does not cut it. When you have this big upward trend for the dollar index, for this uptrend to continue, dollar strength has to be coming, strong down the pipeline off the idea that, okay, you've got just hot jobs numbers, you got strong, growth outlook metrics like PMIs, you've got high inflation. Like, that's the story you want for for the dollar to continue its rise. This is a key to some of the metal bullishness that I've had recently. You guys might notice it's not a coincidence that I've gotten bullish on metals at the same time that the dollar index has flashed some serious red flags and signals of bearishness within the edge finder. That's not coincidence. That is actually systematic. So when we go take a look here, when I say systematic, what I'm talking about is our indicators here. Many of those numbers that I just discussed, those retail sales numbers, services PMIs, GDP numbers, that coming in light for the US is positively affecting metals and negatively affecting the US dollar. So that is really changing the story here for our output on the edge finder. If we scroll down here, what we can see is some of the more bearish things that we're getting are some currency pairs like the euro yen, the CAD yen, the Swiss yen, which I personally have a short position on already, and the dollar yen. So we're getting some very interesting, in fact, dollar yen taking the place as the most bearish on this list currently. Let's go have a look at some currencies while we're on the subject. We talked, let me actually just briefly, before we go to currencies, let me talk silver. Okay, it's Friday night when I'm filming this, and my tears are just now starting to dry from what happened to me Friday. Oh my gosh, this actually really was one of the most annoying things that's happened to me in my trading in recent time. I woke up on Friday morning with an excellent realization that silver was up 3%. And there is no point, I'm going to be as transparent about this as I can. I looked at that and I literally was like, heck yes, my silver play is working out beautifully, going according to plan. It's going to be a great day. Well, again, the haters will love this. I've got some recent ones. There's some people who have been really loving to pick on me in the comment section recently. It's nothing new. I've done YouTube for years now, but the hecklers loved this one. My silver trade completely flopped on Friday. I mean, it was like Friday morning pancakes. We were flip-flopping like no other. My gosh, guys, I was like, okay, woke up. I was like, heck yeah, it's going to be a great Friday. We got a solid close for silver. What happened? Complete reversal. And you guys have to understand, this is painful. Psychologically on Friday, this has been annoying to go from being up 3%. I mean, my portfolio, guys, was up 2% because silver's a pretty good sized position for me. Completely reversed and actually went negative on the day. To say, even though I've been doing this since 2016, 2017, that still stinks. It's no fun when that happens. Again, it's not like I lost a lot of money today. In fact, my portfolio ended up being kind of flat. But to go from being up 2% on the day to being flat on the day, if you've ever been there, my gosh, you want to just hit a punching bag for a little bit. It's frustrating. It's part of trading. And it's like, I thought about it here even now as I'm speaking about this. It's just like, you know what? This is the life of a trader. This is why most people can't do this. This is why I do something this hard and keep doing it, is because I'm probably insane, and most traders are, but also because you have to be able to stomach these types of events. That stinks, but I have to stick to the plan, right? So when I look at this and I say, look, silver is still bullish in my system, and I have my entry, I know what I'm going to do here. I'm risking appropriately. If this thing completely reverses and goes lower and hits it, and I get 17 comments in my comment section making fun of me for this trade, you know what I'm going to do? I'm going to show up and I'm going to do it again, and I'm going to make a boatload of money in the next 10 years. I don't care what the short term does. Does it sometimes emotionally affect me? Absolutely. Everybody is a human being that's trading, unless you're just absolutely, insane. Everybody feels the effects of their trades. And so this was no fun on Friday. I'm just being real with you guys. But I'm going to stick to the plan. And like I said, over the years, you make a boatload of money trading your system, sticking to the plan, or you can change your system up every week. Like here's a common example. This might really resonate with somebody who's listening right now. I literally had a fleeting thought. I've done this for a long time. I have the benefit of having done this for a long time and becoming a profitable trader. When you actually have made it to the other side, you know these thoughts are ridiculous. But when you're still learning, these thoughts really seriously affect you. I had a fleeting thought today. I said, dang, I should have just taken some profit. And I literally heard that, and I stepped out of my own mind and I said, Nick, you moron, no, you shouldn't have. This is what you do. You don't break your system. You don't. And I never actually was going to pull the trigger or close a position. I've been very, very good overall. I would say one thing that I'm very good at is sticking to my rules, sticking to my system. I don't break my rules hardly ever. But the thought crossed my mind, oh, I should have just closed right there. Well, that is not what got me to the place that I'm at today, where I've made on this account 200% since inception. I've upped 200% on my portfolio. You can go watch the video on my YouTube channel. It's on the homepage if you want to see my broker login video. I'm not up 200% closing trades early because I am fearful of a reversal. That's not what got me here, right? So I'm just ranting here. It's Friday night. Give me a second here. But you get my point. Silver, I like to the upside. It's systematically still a buy for me in my system. Like, this is what I'm supposed to do. I'm supposed to either ride this thing to stop loss or ride this thing to the moon. That's how I'm going to trade this, as I do all of my trades. Again, people are going to have something to say. You get people who said, Nick, you should have closed partial. You should have done this. But I respectfully, I really appreciate you guys who watch my videos and support me. And I know the real supporters will also support what I'm about to say. I don't make any of my decisions based on YouTube comments, trolls, people who mess with me. Like, it's just part of the game. So I'm going to stick to the rules here. I'm still long silver. I like the trade setup. Nothing has changed for me to move stops, move take profits, move anything. I'm just going to continue to do what I'm doing. As long as the system stays bullish for gold and silver, I know overall I've made a lot of money, and I plan to make a lot more money trading my system. Okay, so there's that rant. Apologies for that. I do want to just mention, if you're interested in trading directly on TradingView, it is a really convenient thing to be able to do that. I've got several brokers listed in the description down below that might be beneficial to you. You'll also be supporting the channel if you choose to use one of our affiliated brokers. All of them, like I said, are linked in the description down below. Let me move on to currencies for a second. So dollar index breaking support here to the downside. And what I'm looking for here is overall, where do we go from here? Are we gonna pull back and test this area? And if so, is that gonna hold? Are we gonna push down to 106? I would not be surprised if 106 is in the cards next, if that's our next spot. If we see price continue towards that 106 level, I would think that in the short term, that makes a lot of sense. You've had lower highs, lower lows, and a breakout here on Friday to the downside. That seems like the path of least resistance. Euro dollar very well may actually be testing here some areas around 1.05, but we may go back and test 1.06. I would, like I said, not be surprised with the dollar weakness that we saw on Friday and some of the economic data, the way it's been falling. Pound dollar may actually be having some room to go back and test like 1.28. Dollar yen could easily see 150 again. This is, to me, in my mind, this is path of least resistance, is to go back and test levels like 150 and below. So again, yen looks really strong, and I want to show you, maybe this is a good opportunity to show you guys a new feature that we just added to the Edge Finder. It's the Japanese economic heat map. You guys know we've been looking at U.S. economic heat map data. Look at this, relatively blue. You've had higher than expected retail sales. GDP growth has been better than expected. You're seeing employment numbers looking overall pretty good. Inflation data came in hot, right? That's strong for the Japanese yen. So all of this story here seems to favor, in the short run, in my personal perspective, more downside for things like dollar yen, selling dollar, buying yen. That's my bias there. I mentioned earlier, I do already have a position on Swiss yen. I took a short position here. I'm willing to add short positions if we can get a larger push to the upside. Is more of a long-term kind of swing trade or position trade that I am looking to build on something like Swiss yen, or Swiss yen specifically. So I still really like that setup. And that's mostly what I wanted to cover here today, guys. Last thing I'll say is that I do have one trade that's going really well. I'm still long TLT. I had a position here the last several months. I don't have a stop loss. I don't have a target. I just have a position of my portfolio dedicated to TLT at this time. This really seriously reversed course higher. Really nice little kind of break to the upside, momentum formed. A bit of a fake out. This kind of, what do you call that candlestick pattern? Someone tell me. It's like the island candle or something. There's like a baby in the cradle. There's all these crazy names for candlestick patterns. But you have this big gap down for TLT. This is bonds. This is a 20-plus year treasury bond ETF. And then ripped back on some of the tariff stuff that Trump said. Basically, tariffs, he said, are still coming, but they're being pushed off. They're in the works, basically. The market liked that because they're not being stamped onto the table and thrown in every direction. Seems like there's some orderly kind of conduct to the tariff plans, and that the market seems to really like. So for inflation concerns, cooled a little bit on Friday, causing TLT to rip higher. Yeah, I mean, so I like TLT. I'm going to stay with the trade. I think we're back above this moving average here. Looks okay. I don't love the trade. I don't hate the trade, but it serves a purpose in my portfolio. If you do get bigger tariff or just in general risk off move or interest rates fall quickly, perhaps weak jobs data, perhaps, something like that. I like the idea of having some TLT in my portfolio. Just curious on a weekly basis. Yeah, we're breaking this kind of downward momentum on a weekly basis as well. But I do like the trade quite a bit. Last thing I'll look at is oil. Take a look at the daily chart here. Bearish momentum, but sitting at a pretty key level of support. We're trying to break that level. Let's see what happens at 71 for oil. This is WTI. If this breaks lower, that is deflationary or disinflationary, I suppose is the better term. Trump seems pretty adamant about getting oil prices lower. We'll see if this take place and what that could potentially mean for inflation globally. Like I said, guys, if you'd like to pick up a copy of the Edge Finder, check out the link in the description down below. Use that promo code to get a discount for subscribers. Thank you very much for watching. Have a great rest of your day.